Have you ever found yourself caught in the chaos of a tanking market, feeling like your ego is driving trades more than your brain? If you're feeling that way right now, I can point to thousands and thousands of other people that are feeling the exact same way. Welcome to today's episode of the Trader's Mindchat show, where we are going to explore how to eradicate the ego and aim for calmness in your trading. So, how do we do this? How do you prevent yourself from getting caught in a market like this? Well, the first way that we're going to try to tackle this is addressing the fact that most traders treat trading like a hobby. They're spending countless hours on the news, on the charts, on social media, and they have very little to show for it. And if that's you, if that strikes a chord, type into the chat and let us know. If you are feeling that way, don't feel ashamed or embarrassed by it. The first thing to do is to address the problem. I felt that way. I felt that way for a very long time. And it wasn't until I addressed those feelings that I was finally able to move on from them. And that I was able to say, okay, you know what? Yes, I am pouring loads and loads of time into trading, and I have fairly little to show for it. So something's got to change, right? Because if I continue to go along this path and I am not getting results, what's going to happen if I continue along the same path if I don't make any changes? I'm going to make the same kind of mistakes, right? I'm going to continue to make no progress, right? Well, it took me 10 years to finally figure that out. You could start making changes today. And the first way that you need to start making changes is to figure out how to turn your trading hobby into a trading business. There's a big difference between having a hobby and having a business. A hobby, you're going to spend lots of time, spend lots of money. You're going to dive deep into a lot of different areas, but you're going to be kind of all over the place with your trading. And it's not going to be directed, it's not really going to be focused. You're going to have a lot of random variables, right? You might be really into, say, Tesla or Nvidia, or maybe you just love watching content. Maybe you've gone to some conferences. Maybe you plan on attending some more virtual conferences over the weekend, and you're really revved up. But do you have a trading business? It's great to go to conferences. I'm not knocking conferences, but what you want to do is take the information and actually build a plan out of it. That plan is something that's going to help you to filter out the noise, right? So let me pull up this chart once again. I'm not caught in any of this. In fact, I exited all my positions yesterday morning at about 11 a.m. At about 11 a.m., right? So let's come over here to IWM. This is the proxy for it. Here's what the action looked like at 11 a.m. This is a 5-minute chart. So about over here, right in this neighborhood. This is where I'm completely in cash. Now, you might say, well, why? Right? And from what level did I start to reduce? I was only invested in two names that I started that very day. They weren't performing well, so I exited, and I exited with about a 1% loss on each of them. NTAP, or that's the that's the ticker. The name of the company is NetApp. So here's NetApp, and here is the other one, Arista Networks. So this one entered here on the pullback, exited here, right? Like right in this ballpark. NTAP or NetApp entered here, exited about right there. Both of these are down significantly more. So why exit so aggressively? The reason why is because of the business plan. The reason why I would exit so fast, cut losses, it's not just because I heard or read a book somewhere that says, you should really cut your losses short. That's great. Those are things that you should include in your plan. But it's really following the plan, right? So it's having a business plan, following the business plan, not relying on yourself. I think that the ego really gets involved in trading when you start to rely on yourself, that you have to make a trade work, that it's up to you to get your P&L out of the gutter. Great. So in and you know what? In some degree, it's true. In some degree, it's true because it's on us to figure out how to do it, right? So the way that you're going to figure out how to do it is through a business plan and then relying on the business plan. If you're relying on yourself to figure out in the moment, like, oh man, what should I do here? What should I do there? Then that's when the ego starts to come into play because now your emotions are tied into the trade. It's up to you, right? It's almost like it's the Super Bowl and it's the last quarter and it's up to you to figure out what to do. Well, if you're put in that scenario, what are you going to do? If you're Tom Brady, you're following his plan, right? If you're Peyton Manning and you're calling an audible, the audibles are all part of the plan. It's not random stuff. So if you go to your trades, right, and you're seeing the market drop 3.5% today, right? Well, let's pull up the charts once again. You're seeing this happen, right? The Russell is down 3.5%. You're seeing the Nasdaq continuing to fall. Nasdaq's down 2.5%, and you're scared. You're worried. Well, if you have a plan and you follow your plan, then there's not a whole lot to worry about. Now, let's say that you're caught in this mess and you're not exactly sure what to do. Part of what I would do is to exit. Well, when I'm in a trade and I don't know what to do, the thing that gives me clarity is to exit. And well, I'm able to think a lot clearer when I'm no longer in the position. I could always re-enter, but the first step to gaining clarity is to hit the brakes and get out. That's what I would do if I was caught in this and I'm like, oh, well, what do I do? If that's how you're feeling right now, let me know. Well, let me go over to the chat and see if anybody's put anything into the chat yet. No, not yet. So make sure that you are alive. Right? I'm putting our famous banner across the bottom here. Leave a comment. Let us know that you're alive. Got people on here tuning in. We have some people on X. We have some people over on YouTube. So let us know that you're alive. All right. So next up, how can you stay calm in this volatile market? How do you stay calm in a volatile market? Well, first, of course, if you don't have a plan, then it's fairly difficult to stay calm because even if you know how to meditate, even even if you know about prayer, even if you have a security blanket or something, those things aren't going to help you when real money is on the line and the market is dropping and you don't know what to do. All that stuff would be akin to being an ostrich and burying your head in the sand. That's not what you want. Right? That kind of stuff, that's amateur hour. That kind of stuff doesn't work in the market. Maybe you could get away with that kind of stuff when the market is charging up, right? And you over here, and it's like, oh man, I'm gonna buy the dip, and then all of a sudden the market surges higher, and it's like, oh yeah, that's great. Well, guess what? What happens when the dip keeps dipping, and you don't really know what to do? Meditation is not going to help you. Prayer by itself is not going to help you. It'll Prayer will help you for a lot of different things. I pray all the time, but I also know what I'm doing when it comes to trading. You need both. You need a plan, and you need prayer, and you need meditation. You need something that's going to clear your mind. So let's just say that you do have your trading business plan. Well, guess what? One of the things that I talk about it in my new book, the Trading Success Blueprint. I just put this out yesterday. There's a link in the description here. In fact, I'll share the link in the chat right now. One of the things that you could do to stay prepared is to have a method for how you're going to focus your mind. You should have a psychological preparedness plan as part of your trading business plan, right? So how do you stay fresh throughout the day? Well, I'll share with you what I do, and the book talks a little bit about what I do, and then there's another thing that you could add on where I share my actual business plan. What you could do, and or what I do, is I have a morning routine, I have a midday during the day routine, and I have an evening routine. So part of my routine does involve prayer. Part of it does involve getting up and moving around. Daily exercise is important, but also getting up at least once an hour to make sure that I'm not just sitting in a chair all day long. That could get very monotonous. Your mind could start to wander. You could start scrolling on social media. The way to break those habits is to build in rest periods throughout the day. And rest doesn't mean just, sitting back, relaxing in the chair, turning on the TV or whatever. It means getting up and moving. It means doing something else to break things up. And it's that part that allows you to come back and be refreshed. Drinking water throughout the day. I aim for about 100 ounces of water throughout the day. I'm behind right now. I need to catch up. But having a variety of things in your psychological preparedness plan can really help you. And to actually take the time to write these things out. Right now, don't just have it be something that's in your head. Actually have a plan that you've written out or typed out somewhere that's accessible, somewhere that it's going to be a living document. Those are the kinds of things that will really help you and help your trading and transform it from something where you're going through this endless boom and bust cycle to something where you're able to consistently make money for it. And you'll be able to sidestep markets like this, where maybe you were doing fairly well, and then all of a sudden, within a couple of weeks, now you're back to even or worse. Let me know what questions you guys have. Type into the chat. All right, let's talk about some of the key things for you to include in your trading business plans. Number one, number one, first thing that you're going to want to include in your trading business plan is your core trading philosophies. How do you figure out what those are? You can figure out what those are by start asking yourself a series of questions. First off, what do I believe about trading? Right? Take some time, write out everything that you believe about trading. Those are going to be your core trading beliefs, right? The first things that start to pop out will be your trading beliefs, your core trading beliefs. Give yourself a time limit for these things. Don't just say, oh, I'll sit down and whatever comes to mind comes to mind. Set a timer. Start off giving yourself a 10-minute timer. Could even do a 5-minute timer if you're stuck for time, but give yourself a timer and write out as many beliefs about trading as you can. You'll find that you'll probably fill out the entire time, but having a timer will force you to sit there for the duration and not give up. It'll also give you some goals right there, right? Like, okay, I'm gonna sit here and I'm gonna write this out for 10 minutes. Great. See what you write out. Then you could start to figure out, well, what are my goals with trading, right? So, well, what are some of the goals that you have with trading? Of course, you probably have some financial goals with trading, but maybe you have some other goals too. How involved do you really want to be in the market? Right? Do you want to be looking at every tick? Do you want to be reliant on the news? Do you want to scroll through social media and see what other people are thinking? Or do you have other ideas in mind? Do you have something in mind where you want to be self reliant? Well, guess what? If you want to be self reliant, you need a business plan. And it needs to be something that you've thought about and researched, or at the very least, to start, right? Like, so if you're somebody that's like, you know what, Mike, like I've been trading or trying to learn about this for about a year. I don't really know everything, and I wouldn't expect you to know, right? Trading is pretty hard. So what you can do is start to read up on some of the great strategies out there. I include what I do in the trading mind wheel, but a bigger part of what I talk about in the trading mind wheel are the different elements that you need in order to be a successful trader. Start to read up on those. Then, as you start to construct that, then you could start to think about, well, how can I build a business plan based off of these things, based off of my research, right? Because after you've read the trading mind wheel, one of the things that you will learn how to do is how to factor model, how to go back in time and see, okay, here's what worked for this particular strategy, or how this person did things in the past, and here's what worked, and here's why, and here's how I'm going to back test it for myself, and then forward test it in real time. And then when you start to gain a real sense of confidence about what it is that you're doing, then you can start to build a plan around that. But without that plan, without that written document, you're still kind of flying blind. Even though you kind of know what to do, it's not solidified, it's not concrete. Once you start to lay everything out, then you start to think through, like, okay, what do I want to put in here? Because anything that I put into this document is going to be what I do. Anything that doesn't make it into the document is noise, right? And that's how people ask me, well, Mike, how come when the market is doing this, you're sitting on YouTube talking to people? How come you're not busy looking for trades? How come you're not scared and worried and thinking, oh my God, the market is down 2.5%. Oh my God, the trade that you put on, or this trade in NTAP, it generated a 1% loss for you the other day. Isn't that painful? Isn't that frustrating? No, none of it's painful. None of it's frustrating, right? Enter here, exit like right here, right? And why? Why would it not be painful to give up a loss? Because you take trades that are a part of your business plan. Not every trade is going to work. So here's an example. Let's say that you own a dress store and you buy some red dresses to sell in your dress store. Well, it makes sense. You own a dress shop and you want to sell some red dresses. Great. Are you going to be upset that, red dresses aren't selling right now? Well, maybe, right? Like, you have this extra inventory, but are you upset because it was against what your business was? No. But if you decided to I don't know, start selling bubble gums in your dress store, then maybe you should be upset. Why? Because you're a dress store. You're not a deli. You're not a bodega. It, what are you doing selling bubble gums? Same thing with trading. Same thing with trading. If you're a stock trader, then and you have trading stocks as your business plan, then you shouldn't be off trading forex. You shouldn't be off trading futures. Maybe in the future, right? See what I did there? Maybe in the future, you could add futures to your business plan. But until then, if you're doing it without it being a part of your business plan, then you're taking random trades. And you could tell yourself that no, I'm not. I'm trying to expand my horizons. But unless if you're doing that in a structured way, you're really not. You're really not. And what you're doing is getting yourself stuck in this cycle, stuck in this loop where uh, you're really system hopping. And you would be lying to yourself if you're telling yourself otherwise. And I know that could be very hard to hear. It's not what I would want to hear if I were there back then. And I'm actually kind of surprised to not see people hopping off by hearing that. But it's the truth. It's the truth. You need to have a business plan. No one else could write it for you. You need to write it for yourself. That's how you're going to have the belief in that plan. That's what the Trading Success Blueprint is going to do for you. It's going to walk you through all the elements of writing a business plan for yourself. Core philosophy. What are your various goals and objectives? How are you going to meet those goals and objectives? What you're going to trade, how you're going to trade it, all of the details of your trading strategy, the day-to-day psychological preparedness, everything goes into your business plan. It's going to be very thorough. It's going to take you some time to write. It may sound daunting to write a business plan. Especially if you're not a business person, but it doesn't have to be. That's why I wrote this Trading Success Blueprint. I wrote it for you. I wrote it for people that are not business people and can have something that's quick and easy to follow. It'll still take you time, right? Like by easy, I don't mean that, oh, it'll be done in 10 minutes. No, you're not going to have a good trading plan, uh, a good business plan done in 10 minutes. It's going to take you some time, but it's going to be a lot easier than you thought. And you'll be able to start making some real progress and start being consistent. So, all that said, let's get into the Q&A. Let me know what questions you guys have. Go ahead and type into the chat. And by the way, if you are not already on our free newsletter, make sure that you get our free newsletter. It's over at marrowwealth.com/newsletter. And wherever you happen to be watching from, make sure that you like and subscribe and drop comments. I read all the comments, whether you are doing this live. If you're doing this live, then your comments will get answered right here on the show. If you make a comment later on the recording, I log in later on and I check all the comments and I reply to everybody. So get your comments in and let's see. All right. I've got a question here that I think is a really good question. It came up not here, but yesterday. It came up on the webinar that we did yesterday. Yesterday we did a free webinar. And one of the questions that came up was how to best manage risk and position sizing. I think that is an excellent question. And it came in from Rao. So one of the ways to best manage risk and position sizing is to understand that there's really a fine line between those two, right? You have uh, the element of risk where if you risk too much, you might blow yourself up. If you risk too little, you'll never make any progress. So there's a fine line between how much you should risk, too much or too little. There's a lot of strategies that I've tried, a lot of strategies that I've tested. One of the books that I read about it was this one right here, Banthorpe's Definitive Guide to Position Sizing Strategies. It's an excellent book. It's a thick one. It's a textbook. Of all the strategies that I read in there, of all the other strategies that I've read, the one that makes the most sense as far as position sizing goes has to do with progressive exposure. Progressive exposure. What's progressive exposure? Progressive exposure is betting heavier when you're winning and lightening up when you're losing. So let's say that you had a few losses in a row. Well, guess what? When you start to get back into the market, you want to be trading small. You want to be trading small. And you might say, well, I want to make that money back. I want to make that money back quickly. And not only that, what happens if my next trade I put on that ends up being a monster trade and I had a much smaller size? That can happen. But the way to dig yourself out of a hole is to start by putting down the shovel. The way that you put down the shovel in trading is by trading small until you start to gain some traction. The way that the market works is that it works in waves. So have you ever noticed that you tend to have a string of losers but you also have strings of winners? That's not a coincidence, and it's not because all of a sudden you had some aha moment and everything just clicks, or at some point later on you forget everything. No, that it's because the market moves in waves. And because the market moves in waves, then that means that if you have a couple of winning trades in a row, there's a good shot that more winning trades will come very soon. That's why you want to use progressive exposure, because if you get one or two wins, right? Like let's say that you get 2 wins. Let's say that you have 3 wins back to back to back. You could then take the profits from those winning trades and use those to finance the risk on your additional trades. And so you're scaling up. So if you're about to catch a wave, then you're starting to bet bigger. At the same token, when the current starts to go out and you're caught in a market like what we're in right now, you can start to bet smaller. And then from there, what'll happen is that, okay, now the market's coming in and I had a couple of losses, but I kept them small and I lower my position size and I put some more on. Well, guess what? If you trade another couple of losers, then instead of damaging your account, it's going to be like these little nicks. So progressive exposure is a great way to position size. Let's see if there's any other questions, or we may be calling it a wrap. All right, everybody. Looks like that will be it for the day. So as always, it's been a real pleasure. Thanks so much for being here with me today. I look forward to speaking with you again next week. And go grab yourself a copy of the Trading Success Blueprint. It's a fantastic book. It's going to help you build your trading business plan, and check it out. That's it for me. Take care, everybody. Much love. God bless. Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Mara Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.